this stock just crushed 11%. And on this video, I want to talk about what happens next. Are we buying or are we selling? And this is none other than ASML, a beast of a company, one of the strongest players in the AI market. So for today, I want to talk about the Q2 earnings that have caused the stock to plummet 11%, give my thoughts around what has been reported, what has been said, as well as the guidance for 2025. I want to talk you guys through my investment in ASML. I want to talk through what Warren Buffett has suggested in the past with other stocks and walk you through three scenarios: a bear, a base, and a bull scenario, as well as my final thoughts on whether I'm buying. But firstly, I want to thank you everyone for watching my videos, for liking. The support has been overwhelming. You have been leaving comments that you're enjoying my videos. So all I ask, guys, is if you can subscribe, leave a like, leave a comment, and I'll get back to all the comments in the comment section below. So the stock is down heavy post earnings. The company posted earnings this morning and the stock plummeted 11% just as the market opened. Now, as the market closed this time, the stock is roughly down 7 to 8%. But with that being said, I wanted to flag the P ratio. Historically, over the last 5 years, the lowest P ratio recorded from ASML was 26 or 27, and we're currently at 29 P. So compared to the P ratio, the company is actually trading at very low historical levels. For the second quarter of 2025, ASML reported and beat expectations in EPS, in revenue, in gross margin. But for me, the one that was flagged the most was the quarterly net bookings, which crushed expectations. Now, overall, I'm very happy with the earnings. I did think that it could be a lot worse given the tariff situation, given the US EU situation. However, the short-term thinkers, which is Wall Street, did punish the company because the leadership, the CFO and the CEO, gave cautious guidance for 2025 despite the strong operational results. And overall, the consensus from leadership is that they're very optimistic on demand, particularly with how well their EUV machines are performing, but they are wary of the macro and geopolitical risks. So why was Wall Street spooked? I mean, as we said, the net bookings came up 25% above expectations at 5.5 billion. In fact, it was almost in par as last year. And as you guys see, it's way higher than what has been estimated, and also way higher than Q1, which does position the company quite well for the rest of the year. Now, what has spooked investors was two things. The first one is that the CFO said that a potential 30% US tariff on EU goods would ramp the price of a single high-end machine from 250 million to 325 million. So that's a 50% increase in cost for ASML, which is enormous. There isn't much to say on this because this is still speculation. The US and EU still have 2-3 weeks to come up with a deal, and my take is that the CFO is being cautious by throwing this number because it's not even aligned with the tariff itself. And also, we don't know what industries the tariffs will target, as well as we don't know how much of this increase in cost would be passed on to the consumers. Now, the second thing that spooked investors was the fact that the CEO said that the level of uncertainty is increasing because of macroeconomic and geopolitical consideration. And as a result, ASML, instead of giving reassurance for their outlook for 2026, they mostly remained cautious given their geopolitical uncertainty, which analysts didn't like. And so for those two reasons, the stock plummeted. Now, what did they exactly say for 2025? Well, the CEO said that firstly, looking at 2026, beyond 2025, 2026, they still see that AI customers' fundamentals remain strong. And I think that's very encouraging to see. And they weren't able to confirm what the growth looks like apart from 2025, which they said they expect growth to be at 15%, gross margin to be at 52%, which is exceptionally well, in my opinion. And overall, they are saying that adoption is advancing as planned. They are particularly happy with their new system, and they are at a momentum that is being reinforced by the new system as well. Now, my opinion, apart from the fact that, there's some things that we cannot control, like the tariff situation, I think my opinion is that leadership is being extremely cautious on what they say and why they say it. And I'm going to touch in a second on why. Before I do so, I wanted to talk about my investment in ASML. So I have invested at 675 USD. And since then, my performance currently is at 11%. So it was roughly 22% before earnings. Now it's at 11%. And whether or not I'm buying more, I'm going to ask you to stay till the end to find out. So what's my take on the earnings? What's my take on ASML overall? So Warren Buffett has 5 principles. Well, he has many, but 5 of his main principles are, first of all, the company has to have a competitive advantage, or what he calls a moat. And ASML has a moat. They have 100% of the extreme ultraviolet lithography machines, which not only create chips for NVIDIA, as many of you know, or AMD, but they also create the chips in your iPhone, in your Mac. So Apple is a huge customer of ASML. The second principle is having consistent earnings. That's historical and predictable, which ASML has been able to showcase. A strong return of capital with low debt, which ASML has, and I'm going to talk through the numbers in a second. An understandable business model. We all know what ASML does, as I just explained, and a trustworthy and rational management. And this is very important because we just seen today how rational and trustworthy the management is. It could have been a different scenario where the management came and said, we have performed exceptionally well this quarter. We do not expect more impact from tariffs, and everything is great. We are growing like never before. They could have said that and it would have been accurate. But they did decide to remain cautious. They thought that staying cautious, lowering the expectation for the analysts, which is already enormous. Analysts and Wall Street has extreme expectations for this company just because of the market share they have and how important they are in the AI market. And they wanted to calm things up. They wanted to be rational. They wanted to say that there is uncertainty and we are trying our best to, navigate that uncertainty. And with that being said, the two key takeaways is, number one, the leadership prefers to lower the expectations, and then when the time comes, they beat the expectations. And secondly, they rather stay cautious rather than over promise and under deliver, which in both cases show a trustworthy and rational leadership. When I consider an investment, I always think about cash flow growth, because free cash flow is positively associated with higher stock returns. As you see here, the gray line is essentially a research that shows the best performing companies in free cash flow. And evidence does suggest that from the overall stock market, the companies with better free cash flow do perform better. And if we compare ASML with Meta, which for me is one of the best investments I have made, and it's an A-star company, their free cash flow per price is quite similar. And also, ASML has passed the part where it was investing heavily in R&D and wasn't making much money. And I do think that moving forward, free cash flow here will start at a positive momentum, just like Meta has done in the past, right here. And so I think it's just the start for ASML. And cash flow is very important because it shows the real earnings power. Buffett, in fact, calls it the owner earnings because it reflects, firstly, how much the business generates after necessary expenses, but also it allows a company to reinvest, pay dividends, and buy back stock, which, by the way, SML is doing all that without taking on debt. And it also shows durability because it shows a predictable cash flow business that has a sustainable competitive advantage, which ASML has. Now, historically, with financial metrics, which is what I was talking about just before, are exceptional. They are growing at strong double digits across their income statement. Their gross margin and profit margin is just phenomenal. They are buying back shares in the meantime. Their returns of assets, equity, and invested capital is above 15%. It's above 20%. It's many times above 30%, which again is exceptional. It's amazing. And also, it's a business that doesn't have a lot of debt. Their debt to equity is only 25%. Their cash conversion cycle isn't the best, but that's expected when you're creating $300 million machines. And that takes me to the three scenarios. So before I dive into the three scenarios, I want to flag a very important sentence, which is that leadership expects 2030 revenue to be between 40 billion and 60 billion, with gross margin expected between 56 and 60%, which is already above the current 52%. So not only leaderships, and we have seen how cautious the leadership is expecting growth in their sales, but also growth in their profit margin. So my complete bear case is a case where revenue grows at 11% to reach the halfway of these two figures, so 54 billion in revenue, and the net income of 16 billion, which is a 12% EPS, given the fact that the company is also buying back stock and also is expected to grow gross margins. This leaves us with an average intrinsic value of just under $600, which is just 21% difference from the current value. Also, much of these numbers come with a margin of safety of 50% and a discount rate of 8%, which in my opinion is very safe. And under the base case, my price target for 2030 is 1,300, which is 70 to 80% the current price. Now, under the bull case scenario, the revenue would grow at 14% to reach a 62 billion. Now, why I have raised the revenue to be higher than the 60 billion figure here is because ASML has a history of beating earnings, beating revenue. And I do think that given the fact that how cautious the leadership has been in the past, I do think that this guidance is very cautious and they are playing it safe. So at 14% revenue growth and 16% EPS growth, as well as 18% FCF growth, the average intrinsic value is 731, so just 3% the current value. So we are very close to the bull case intrinsic value. And under the bull case, I do expect the stock to double to 1,600. Now, before I dive into the bear case, I want to say that the bull case, in my mind, is a very probable scenario. I am very cautious with the three scenarios, and for me, the base case, I'm leaning towards the bull case rather than the base case. But with that being said, these are the three scenarios, and I want you to have a look at all three. The bear case is a scenario where not only ASML doesn't fall in the lower end of the guidance, but also doesn't reach the guidance. So revenue grows at 6% to reach 43 billion. EPS grows at 7% just because the company is also buying back stock, and FCF is growing at 9% only. At this case, at this scenario, the average intrinsic value is below 500, so almost 40% difference from the current value, and a price target of 1000 USD by 2030, which is not ideal because from the current price, the appreciation isn't a lot, especially on a 5-year horizon. So I do think that the bear case, it's really a worst case scenario. And given the fact that ASML plays a huge role in the AI market, and the AI market is here to stay, I don't think this is a realistic scenario in my mind. But it's better to be prepared. It's better to accommodate for the worst case scenario than not. And the good thing is that even at the worst case scenario, the expectation would be that the stock would still be higher in 2030 based on what we're seeing in the numbers. Now, am I buying more of this stock? Well, as I said, I have invested at 675, so I'm currently not looking to buy more. But if the stock drops below the 600 USD level, I am buying. And you might say 600 is a long way to go. Well, actually not, because if the stock drops just 15% or 20 very very close to 20% from the current level, it will reach that 600 USD. So we're not very far from 600, the 600 levels, and there is a possibility that it does, and I'll be ready to deploy capital. Even if it gets close to 600, if it gets 650, 640, so that's like 10 to 12% drop from the current price, I would consider buying more. But time will show. Time will show. At that current price, I'm happy. We'll see how the stock performs over the coming days. But with that being said, guys, thank you so much for listening. I hope you enjoyed this episode once again. Leave a like, leave a comment, please subscribe, and I'll catch you on the next one. Thank you so much.